Hello everyone, welcome to the 1 minute Nifty Bank Nifty scalping techniques and strategies. We're very excited to have you in this course, and this course is launched by nonaganinvestments.in, and my name is Saurav Kaushik. I'll be your instructor for this course. So scalping is a challenging trading technique, specifically when applied to Nifty and Bank Nifty markets. It involves taking positions that are held for a very short duration, ranging from a few seconds to few minutes. In scalping, traders focus less on the overall market direction and prevailing market conditions, and instead seek to capitalize on short-term price swings to generate profit and losses. So this is the 1 minute formation, and we have already discussed what a build-up is, right? So if you look at this particular point, this particular structure, this is a long build-up, right? We're going to focus on only long build-ups. So let's find how many long build-ups we have in this particular area on the screen. So this is a long build-up, this is a long build-up, right? And again we have a long build-up over here, we have a long build-up over here, right? So these are the build-ups, but we are going to discuss on edge formation today, right? So what is the edge formation actually? So whenever there is a formation of a build-up, we are going to mark the highest high and the lowest low of the build-up, right? So what is the highest high? So if you look at this particular build-up over here, these are a small build-up, small candles. What is the highest high of these candles? Right? This is the breakout, right? We're not going to consider the high of the breakout. We're going to consider the high of the build-up. And what is the lowest low? This is the lowest low. Okay, so this is the highest high and this is the lowest low. So we are going to mark the high and low. So this is the high and this is the low of the build-up. And when the price crosses, or when the price cross this particular low of the build-up, either it can close or it can touch, no problem. Whenever a candle from upwards come and cross or touches this particular line, then and there we call it as edge formation, right? So this is the step one to call a structure an edge formation, right? So over here, if you can see, this particular red candle has touched the low of the build-up, and we can mark this as this, right? Like this. So this kind of structure is called edge formation. Build up, price went up, breakout, and then it has to cross the low of the build up. This kind of structure is called edge formation. Now, second point, after crossing this particular low, the price has to try to cross this particular high as well, maybe in the same candle or maybe in the upcoming candles. So for the edge formation, this kind of formation, the first characteristics is after a build up, the price has to cross the low of the build up. It has to either cross or touch, anything should be fine. Now the second criteria is the price has to touch or cross the high of the build up, right? Which means again the price has to try to cross the build up, right? And this kind of structure is called an edge formation. Okay, now here you can see there is an H formation. Why? There is a build up, a long build up, price went up, it came down, it crossed the low, and again in this particular candle, this particular pin bar that you can see, the red pin bar, it tried to cross the high, and then and there we call it as H formation. So this is what we call an H formation, right? Perfect. Now if I ask you what is the high of the H formation and what is the low of the H formation, the high of the H formation remain this. Now the low of the S formation will become this. This is required to take an entry, but this one we'll discuss whenever we discuss the buy and the sell strategies. Don't worry. Okay. So this is what is called an H formation. Now coming to this had a build up, but the price didn't come down and cross the low of the build up. So there was no H formation formed for this particular build up. So we'll cancel this particular build up and we'll consider only the fresh build up, right? Over here as well, we are going to cancel all these particular build ups. We're not going to look for any S formation here because there was no S formation, and after that we saw an S formation over here. As soon as we saw an S formation over here, these build ups got invalid, right? Which means we are going to consider only the fresh or the new formed build up. So this is what an H formation is. Hello everyone, we are going to discuss on engulfing patterns. Engulfing patterns are of two types. The first one is bullish engulfing, and the second one is bearish engulfing. So what is bullish engulfing? When a red candle is completely engulfed or completely eaten by a green candle, it is called bullish engulfing pattern. I repeat, when the body of the red candle is completely engulfed by the body of the green candle, that is known as bullish engulfing. Now if I ask you to identify bullish engulfing, or if I ask you, is this a bullish engulfing? Yes, right? Because the body of the red candle is completely eaten up by the red candle. Again, now let's try to find a bullish engulfing pattern. This is a red candle, and the body of the red candle is completely eaten up by the next candle, which is green in color. So this is called a bullish engulfing pattern, right? This is also a bullish engulfing pattern. Body of the red candle is completely engulfed by a green candle. Now coming to point 2, bearish engulfing pattern. So what is a bearish engulfing pattern? Bearish engulfing pattern is vice versa, which means the body of a green candle is completely eaten up by the body of the red candle. Now if you look at the chart over here, this is Bank Nifty 1 minute time frame, and we want to see a bearish engulfing pattern. The body of the green candle has to be completely eaten up by a red candle. So if you look at this, the body of the green candle is eaten up by the red candle. So this is a bearish engulfing pattern. Look at this. This is a bearish engulfing pattern. This is a bearish engulfing pattern. So this is what we call a bearish engulfing pattern. Over here as well, we see a bearish engulfing pattern. Now if I ask you, what is this pattern? This is a bullish engulfing pattern, right? Because the body of the red candle is completely eaten up by the body of the green candle. So this is what a bearish and bullish engulfing pattern is. Now let's discuss what a pin bar is. Pin bar can be of two types: bullish pin bars and bearish pin bars. Now, what is a bullish pin bars or pin bar? Bullish pin bar is a structure like this. Color of the candle is not important, but if the wick of the candle towards the downside is longer than the body of the candle, it is called as bullish pin bar. Now we'll look at the bullish pin bar. This is a bullish pin bar, you can see. The body of the candle is very small. The wick of the candle is towards the downside and it is longer, right? This is a bullish pin bar, right? This is a bullish pin bar over here. This candle that you can see over here. Let me zoom it. Now vice versa, if the body of the candle is smaller than the wick of the candle and the candle is towards the upside, that is called a bearish pin bar. Now if you look at this, this is a bearish pin bar, right? And to the left, this is a bullish pin bar. I'll remove the drawing. So this is a bullish pin bar, this is a bearish pin bar. Perfect, right? So now you know what a bearish pin bar is. Bearish pin bar, the structures like this. Color is not important. And what is a bullish pin bar? A bullish pin bar is a structure like this. Okay. The first one is called a bearish pin bar, and the second one is called a bullish pin bar. So in this video we have discussed engulfing patterns and the bullish and bearish pin bars. Bullish and bearish pin bars will be discussing when we bullish and bearish pin bars are specifically needed not for the entries, not for the main entries, but for position sizing. Whenever we are going to add our positions, we are going to take help of the bullish and the bearish pin bars. Okay.